Welcome to today's video on Sector Update. We will discuss key trends, challenges, and opportunities that shape various sectors. Today, we are joined by Fund Manager and Head of Equity Research, Shibani Sarkar Kurian, who will give us a broader perspective of various sectors. Shibani, I would like to begin by asking, what is your overall sectoral positioning? And then we will delve into individual sectors.
So, great question to start with. When we look at India and what's happened with corporate profitability over the last few years, there has been a sharp improvement as we have seen corporate profit to GDP ratios rising. A lot of that improvement has been on the back of domestic facing sectors. And when we look ahead over the next 2 years, our expectation is that domestic facing sectors would continue to drive the corporate profit growth. In that sense, sectors such as infrastructure, manufacturing, capital goods, cement, and automobiles, these are some sectors where we continue to be overweight across our portfolios.
Let's start with automobile and auto component sector. What do you think? How are the sectoral dynamics evolving since the launch of electric vehicles?
So auto and automobiles and the auto ang space has seen significant improvement in demand over the last year and a half. It started with improvement where the passenger vehicle segment is concerned, where we saw premiumization take place with the SUV segment clearly leading the way and many of the companies launching products in that particular segment. Over the last few quarters, we've also seen improvement where the two-wheelers are concerned. Our belief is that demand from here on, both in the two-wheeler as well as passenger vehicle segment, should remain fairly robust. And the premiumization trend is also likely to continue. Now, where EV and policies are concerned, we will have to wait and see how policies evolve, especially where subsidies go for the EV space, as well as taxation on hybrid vehicles, which will determine where the overall product portfolios will move towards, given this kind of transition that we are seeing where electric mobility is concerned. Going forward, a few other things that we need to watch out for the automobile sector. One, of course, how the monsoon progresses, given the fact that it does have an impact on rural demand, as well as government policies post the elections, which will again have a bearing in terms of how the sector progresses. Overall, a positive view on the sector continues. And even within the auto ang space, where content per vehicle is improving, we are quite positive on that segment as well.
Moving on to capital goods, what are the trends there? Will the growth in the sector continue?
Absolutely. So we think that capital goods as a sector, if you look at the entire manufacturing capital goods infra space, the sector has done well. We've seen significant improvement where order inflows are concerned. And even now, the growth in the order book continues to remain fairly strong. So if you look at this entire segment, CapEx actually started with public CapEx picking up. So you had central government CapEx followed by state government CapEx, which has been driving growth, specifically in areas like roads, railways, water, and the like. Now our belief is that private sector CapEx should incrementally as well start to pick up. Capacity utilization levels have improved considerably, and therefore private CapEx will possibly lead growth in the second phase. In this context, companies which have stronger balance sheets stand a better chance to grab a part of the pie. And therefore, if you look at our portfolios, these are the sort of companies within this entire bucket of infrastructure, manufacturing and capital goods where we are positioned.
Now, real estate sector was one of the top performing sector of financial year 24. What are the key factors driving this sector?
So absolutely. So this is a sector that has changed considerably in the last few years, and that is reflecting in terms of price performance as well. A few key things. One, affordability has improved. Secondly, policies have also changed, making the sector more competitive and therefore shift towards the organized segment. And also demand improvement has resulted in inventory levels in the sector coming down, which has led to improvement in terms of pricing. Now, this is a space where, again, the runway for growth remains strong. And as I said, policy changes have resulted in market share shifting towards the organized larger players, and therefore consolidation is also taking place, which again bodes well from a sector dynamics. We have, of course, got to be mindful of valuations. Of course, in some pockets, valuations have moved up, but the structural runway for growth for the sector remains intact.
Now, I assume cement and building materials have also benefited from similar trends.
Absolutely. So whether you talk about infrastructure or housing, a lot of the cement volume growth is dependent upon these two segments. And as these two segments are expected to show the runway for growth, cement is also a beneficiary of the same.
Now, moving to healthcare sector, where do you see the next leg of growth coming for this sector? And what is your approach for this sector?
So our approach to healthcare, given that it's a fairly wide space, has been very, very stock specific in nature. But if let's talk about a few segments within the healthcare space. So starting with US generics, here what we have seen as a trend is that price erosion, which was significant in the last few years, has started to abate. And therefore price erosion has come down to mid to low single digits, which is beneficial. But there is a structural shift that is happening where most of the companies are now looking at value add in this space. So they're looking at more complex or specialty pharma. And therefore, we believe that the next leg for growth for this sector will be led by this trend per se. And there again, you have to evaluate each company based on its overall product portfolio. Within the hospital space, again, profitability remains intact and growth has been strong. But there is a regulatory risk that we must also be cognizant of.
Well, that was quite insightful. Now, financial service sector is one of the most important sector. The credit growth has remained healthy and the mutual fund AUM is also on the rise. So, in terms of allocation, how are we placed?
Again, a very, very wide space, the entire BFSI segment. Let's start with banks. What's happening in banks is that the focus has clearly shifted towards liabilities or deposit mobilization. And hence, those banks which have a stronger liability franchise are better placed in this current environment where liquidity has been tight. So what we have seen is that margins have come under some degree of pressure. Our belief is that net interest margins for banks should now start to kind of bottom out. However, if RBI were to cut interest rates, then we'll have to wait and see what that impact would be on margins. Asset quality has been largely holding up and therefore credit costs are benign. In terms of our positioning on banks, we have preferred larger private banks and larger PSU banks where they have a stronger deposit franchise as well as valuations are in your favor. On the NBFC side, we have been more stock specific, focusing on NBFCs which have capital as well as stronger parentage. And we've been somewhat cautious on the insurance space, both life as well as general.
Now, information technology sector is facing macro uncertainties. What is your take on this sector?
So absolutely. So technology as a sector has seen challenges, primarily because of macro uncertainty, which has resulted in many companies pushing back on discretionary spends. However, the cost takeout deals have continued, which means that the deal flow momentum has been strong. And therefore, over a period of time, we should see that deal translating into revenue growth. However, it's going to still take some time. Near-term trends could remain muted. The other aspect of technology, which is a little structural in nature, is that there is a lot changing. And we've all been talking about Gen AI, for instance. Our belief is that whenever such structural changes take place where technology is concerned, there is a huge opportunity for growth for IT players, which are the Indian IT services players. And therefore, the runway for growth over the medium to long term for the sector remains fairly intact. In terms of positioning, when we look at risk reward, the larger IT players are better placed given valuations and of course expectation of improvement on growth vis-a-vis some of the mid-sized players where valuations have moved up. And therefore, we are somewhat selective where mid-caps are concerned, while the risk reward seems to favor the large caps at this point in time.
And lastly, moving to power sector. With demand for power rising, what are the key trends for the sector?
So this sector actually has seen significant underinvestments in the last maybe decade or so, and which is why we are seeing a demand-supply mismatch. Of course, we are in the midst of summer and we know that the demand for power has been rising and remains fairly elevated, while supply has not caught up. Our expectation is that CapEx, both in terms of thermal as well as renewables, will continue in this space. And that is something that will possibly be seen over the next few years as well. So if you look at our positioning on the sector, we do have exposure where some of the power utilities are concerned, some of the transmission players, as well as some of the power financiers, where again the runway for growth remains fairly intact.
Thank you for all the insights, Shivani. It seems there are plenty of opportunities for investors in the coming month before making their sectoral choices.
Thank you so much. Stay disciplined, stay invested. Thank you.
Thank you everyone for tuning in. Keep following Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
इन्वेस्टमेंट से संबंधित महत्वपूर्ण जानकारियों के लिए माय पोर्टफोलियो विथ आदर्श चैनल को सब्सक्राइब करिए। धन्यवाद।